Welcome back to Boss Economics World, folks. Your fearless guide through the chaotic jungle of global finance, government mismanagement, and economic absurdity is here to break down the latest hot mess coming out of Washington. Buckle up, because today we're diving headfirst into the Trump administration's grand plan to liberate the U.S. economy with a sledgehammer of tariffs, while simultaneously flirting with a full-blown trade war with China. Spoiler alert, this isn't going to end well, and as usual, it's the little guy, yes, you, the hardworking taxpayer, who's going to foot the bill for this circus. Let's unpack this, layer by layer, from the surface-level bluster to the deep economic rot it exposes. And trust me, we've got the data, the examples, and the receipts to prove this is a masterclass in government incompetence. Let's start with the surface-level drama, shall we? U.S. Trade Representative Jamieson Greer is gearing up for a big phone call with his Chinese counterpart, rumored to be one of China's vice premiers, no less. This little chit-chat is supposed to kick off the Trump administration's grand engagement with China, the U.S.'s third-largest trade partner and, let's be honest, its favorite geopolitical punching bag. But before you get your hopes up for some diplomatic breakthrough, remember this, the call is happening mere days before President Trump's self-proclaimed Liberation Day, on April 2, 2025, when he plans to unleash a tidal wave of reciprocal tariffs on, well, we don't exactly know who yet. Surprise! The details are as murky as a swamp in a thunderstorm, but one thing is clear. The administration has already slapped a cumulative 20% surtax on Chinese goods, and they're just getting warmed up. Now, Trump's calling this Liberation Day, as if slapping tariffs on everything from iPhones to soybeans is going to magically unshackle the U.S. economy from the evils of global trade. But let's cut through the bombast and call it what it is, a reckless gamble that risks plunging the U.S. into an economic quagmire, all while China sits back, smirks, and watches us self-destruct. And who's behind this brilliant strategy? None other than Jamieson Greer, the former right-hand man of Robert Lighthizer, the architect of Trump's first-term trade war with China. Remember that disaster? Yeah, we'll get to that in a minute. So, what's the deeper story here? On the surface, this is about reciprocal tariffs and equal footing, buzzwords that sound great on a campaign trail but fall apart under scrutiny. Trump's plan, as far as we can tell from the fog of uncertainty, is to target the top 15 countries with the highest trade surpluses with the U.S., the highest tariffs, or other discriminatory practices. In other words, if you're selling more to us than we're selling to you, or if you've got higher tariffs on our goods than we do on yours, watch out, Uncle Sam's coming for you with a tariff stick. But here's the kicker, this isn't just about China. Sure, China's the poster child for Trump's trade grievances, especially after the USTR's review of the Phase 1 trade deal found, surprise, surprise, that China didn't fully comply with its commitments. But this tariff tantrum could hit allies like Germany, Japan, and South Korea, too. And let's not forget the legal uncertainty. The World Trade Organization, WTO, has already ruled against similar U.S. tariff moves in the past, and this unprecedented, reciprocal approach could spark a slew of challenges, further eroding the global trade system. Great job, Washington, way to isolate us even more on the world stage. Now, let's dig into the real economic issues this exposes, because this is where the government's mismanagement shines like a neon sign in a blackout. First off, tariffs are taxes, plain and simple. And who pays those taxes? Not China. Not Germany. Not Japan. It's you, the American consumer, and American businesses. Don't take my word for it, let's look at the data. According to a 2024 study by the National Bureau of Economic Research, NBR, the Trump administration's tariffs during his first term cost U.S. consumers and businesses over $40 billion annually in higher prices. And guess what? Over 90% of the tariff burden was borne by U.S. importers, not foreign exporters. Translation: when Trump slaps a 20% surtax on Chinese goods, it's not Xi Jinping writing the check, it's Walmart, Target, and ultimately, you, when you're shelling out more for everything from electronics to clothing. But wait, there's more. Tariffs don't just raise prices, they kill jobs. Remember Trump's steel and aluminum tariffs from 2018? A Federal Reserve study found that while those tariffs saved about 8,700 jobs in the steel industry, they destroyed over 75,000 jobs in downstream industries like manufacturing and construction, which rely on affordable steel. Fast forward to 2025, and we're staring down the barrel of an even bigger tariff shotgun. The Peterson Institute for International Economics, PIE, estimates that Trump's proposed tariffs could reduce U.S. GDP by 0.2% annually and cost up to 142,000 jobs by 2026. And that's the optimistic scenario, assuming we don't spiral into a full-blown trade war. Speaking of trade wars, let's talk about China, because this is where the government's economic illiteracy is on full display. Trump loves to tout his great relationship with Xi Jinping, and he's dangling the carrot of a new trade deal. But let's not kid ourselves, China's not sweating this. Why? Because they've been preparing for this rematch since round 1. According to the International Monetary Fund, IMF, China's economy grew by 4.6% in 2024, outpacing the US's anemic 2.1%. And while the US is busy slapping tariffs on Chinese goods, China's busy diversifying its trade partners, signing deals like the Regional Comprehensive Economic Partnership, RCEP, and cozying up to Europe, Africa, and Latin America. In fact, China's exports to the US as a share of its total exports dropped from 19% in 2017 to just 14% in 2024, according to World Bank data. Meanwhile, the US still relies on China for critical supply chains, from semiconductors to rare earth minerals. Who's got the upper hand here, folks? And let's not forget the retaliation factor. During Trump's first-term trade war, China hit back hard, targeting US agricultural exports like soybeans, which devastated American farmers. The government had to shell out $28 billion in bailouts to prop up the farm sector, according to the US Department of Agriculture, USDA. Fast forward to 2025, and China's already signaling it's ready for round 2. Just last month, Chinese Commerce Minister Wang Wentao said Beijing is hoping to address concerns via dialogue on an equal footing. Translation: we're not backing down, but we'll let you think you're in charge while we outmaneuver you. Now, let's zoom out to the broader economic issues this exposes, because this isn't just about tariffs, it's about a government that's utterly clueless about how to fix a broken economy. The US is already teetering on the edge of a recession, with the Conference Board's leading economic index declining for 18 consecutive months as of February 2025. Inflation, while cooling from its 2022 peak, is still stubbornly above the Federal Reserve's 2% target, clocking in at 3.1% in January 2025, according to the Bureau of Labor Statistics, BLS. And let's not forget the national debt, which just hit a staggering $34 trillion, or 123% of GDP, per the U.S. Treasury Department. Against this backdrop, what's the government's brilliant plan? More tariffs, more trade wars, and more economic isolationism. Genius. Here's the harsh truth, folks. The government's obsession with tariffs is a distraction from the real problems: decades of underinvestment in infrastructure, education, and innovation, a tax system that lets billionaires pay lower rates than their secretaries, and a Federal Reserve that's been printing money like it's going out of style, fueling asset bubbles while wages stagnate. Want proof? Real median household income in the U.S. has barely budged since 2000, growing just 0.6% annually after inflation, according to Census Bureau data. Meanwhile, corporate profits soared by 7.2% annually over the same period, per the Bureau of Economic Analysis, BEA. But sure, let's blame China for all our woes instead of fixing our own house. So, what's the solution, you ask? Here at Boss Economics World, we're not just about pointing out the government's screw-ups, we're about calling for real change. First, ditch the tariff obsession and invest in American competitiveness. That means massive public investment in education, R&D, and green technology, sectors where China's already eating our lunch. The US spends just 0.7% of GDP on R&D, compared to China's 2.4%, according to UNESCO data. Second, fix the tax code to make corporations and the ultra-wealthy pay their fair share, so we can fund these investments without ballooning the debt. Third, strengthen global trade alliances, not tear them down. The Trans-Pacific Partnership, TPP, which Trump killed in 2017, could have been a powerful counterweight to China's RCEP, but instead, we're stuck playing tariff whack-a-mole. Folks, this Liberation Day nonsense is just the latest chapter in a long saga of government mismanagement that's driving our economy into the ground. Tariffs won't save us. Trade wars won't save us. What will save us is a government that stops treating the economy like a reality TV show and starts addressing the real issues. So, to my fellow finance nerds and hardworking taxpayers out there, here's my challenge: call out this insanity for what it is, and demand better. Because if we don't, we're all going to be paying the price for this economic clown show. That's all for today, folks. If you liked this video, smash that like button, subscribe, and ring the bell for more no-nonsense economic takedowns. And remember, at Boss Economics World, we don't just watch the chaos, we explain it, expose it, and fight it. Until next time, stay sharp, stay skeptical, and keep demanding better.